Morning, everyone. It's the 11th of Feb. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Good morning all.
All right?
Yeah, all good.
I think I need a bit of a shave.
I had one yesterday.
Yeah, you got a bit of a trim beard there, eh?
Yeah.
You've gone short,
yeah.
have you? I'm going long at the moment.
Need a haircut. My grey's coming
Don't
through.
you go there. I have to do my own. Look, Steve does his own.
In show off.
I might try and get Tash to give me a haircut today.
Oh,
Germans are opening up their hairdressers from beginning of next month. That's the news out yesterday that I saw. It was a nice segue there, wasn't it?
yeah, nice one. I like it.
Yeah.
World Health Organization have recommended that the AstraZeneca vaccine is for adults over 18, which may encourage more countries to adopt the product, apparently.
Well, all adults are over 18, aren't they?
Yeah, that's right. Well, yeah, they are, yeah.
Yeah, but it's been actually approved by the WHO. They've actually said that adults are over 18 now.
Oh, well, that's all right then. We know now then.
Yeah, not much else on the news front, I don't think. Has anything caught your eye, gents? There's a few bits, but it's all fairly boring, really.
Yeah, I thought on the FX Street calendar, they never. I'll just put my screen up. Have I shared my screen?
Yep. There you go.
I'll get it on then. There you go. On the FX Street calendar, it's a bit light on the old releases today. You got EIA natural gas storage, but nothing else. And I just thought that oil had hit quite an interesting level. And then I went to this one, which was investing.com, and we've got this OPEC monthly meeting, monthly report, gauge and an outline of supply and demand and basically what's threatening market trends, blah, 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 blah. And that's out at 12 o'clock today. And then I had a look at oil.
Oil schmoil.
Oil schmoil. And I thought this is quite interesting. First of all, this chart, which is the daily chart. This is a continuation chart, but it's the same as the March futures, I think. And it looked like quite a nice, this last leg up, 1, 2, 1, 2, 3, 4, up in 5. And then a doji yesterday. And if we get a close underneath here, which is about 57.30, then that's an evening doji star and highlights the top of a trend sometimes. And then if you go to this chart, which is the daily, the 1 hour chart, we've got a wedge breakout. So I'm just wondering whether or not a little retest of that wedge this morning. The swing high is there, which is at 58.61. The retest is at 58.65. Just on the back of that OPEC, because I can't see anything else that's moving markets really. But I thought that was quite one to watch today, potentially.
Yeah. I think I highlighted the level at 57.14, so it's quite close to your level, which would mean there's a double top has formed. So, but there's also another interesting pattern on the 1 hour chart. I'll show you in a little while. But
okay, you've got the screen.
There you go.
Okay.
You in.
Yeah, so this was what I was looking at yesterday. This potential for double top when prices was sort of like moving down here, and they've made a new high. So again, this sort of like forms a
lovely bit of divergence.
Yeah. Oh yeah, yeah, and but also on the main sort of trend level I'm watching is this going back to obviously the highs. We're getting very close to it. So I think we'll have this at $61, and obviously these horizontal levels at $65, $66, but $61 isn't far away. It did poke its head up toward above. I thought it got above 59. It says 58.75 on the high there. But yeah, that's it feels a bit toppy, but you know, you need to see that bit of reversal to confirm it before getting into that. But yeah, something like the OPEC meeting, I think they sort of keep people quite up to date, but then they sort of release their proper statement. So yeah, if there's anything new in there,
it's just been a hell of a rally, isn't it? So it's not always wise to try and pick tops and bottoms, but
yeah,
that wedge made me interested with that. You know, especially if you get a retest of that breakout level.
Yeah, and I think you're sort of like getting to that sort of that $60 level, which is always very tempting for the producers to ease off on the cuts. thinking, nice price here. Let's not cut as much as we should. So, and then you'll get natural sellers coming in. Sort of.
I mean, when you look back on your chart there, it's pivotal all the way back to virtually the start of the chart, isn't it?
Yeah,
It's
pretty
prices
much
stuck around it a fair bit.
Yeah, I mean, obviously a big level used to be around $40. Obviously, this doesn't take into consideration inflation, but yeah, it's always.
Didn't you?
No. I was always sort of like, no, let's not go into that because it's a long story.
I've seen a picture.
Oh yeah, but it's always very receding. You know, never had a sort of like proper head of hair. Look like Joe, like showing off. Oh, I need a haircut. I need a hair. No, but it just gets in the way anyway. So it gets in the way of my charts when I flick it to the side. So don't know. I'll sort of go on to gold, which I'm finding quite interesting at the moment. I think there's a little bit of a potential for a retest of this chart. So I'll highlight this level at 1875. We're hovering around between 1840 and 1850 area. 48.78.
Steve.
Sorry. 1848.78 is a level from before, and that I think will be quite pivotal. If we get above there, we've got to really sort of push higher. We've got to retest and break and close above the 80s. That'll lead us up to a target, maybe targeting a move higher towards the 1930 level. So on a weekly basis, we've got positive, but it's not the strongest of rallies. That candle yesterday, a little bit of a shooting star potentially. So really need to sort of like negate that. I think it got up to 1855 yesterday. So
lost you again, mate.
Yeah, okay. You're all over the place.
Try that. Good.
It sounds all right for now.
Yeah, so I think a little bit of a indecision now on gold. Try to get above the 1848. Got to 55, stalled and reversed and closed lower. So potentially we may reject this area. Just really see how price action plays out today. And if we close lower today, then maybe we're going back here. So today's quite a pivotal day, either above 48 or below the open of yesterday, which is 38. So keep an eye on that. Copper still looking rampant.
Yeah, loves it.
Yeah, just should I quickly go over the indices?
Yeah, please.
Yeah.
Again, on the daily chart, we've got the potential for a reverse head and shoulders, but obviously we need a break of 6,300 to confirm that. So we're a little bit of a way off. We're just going sideways at the moment on the FTSE. Levels really to watch: 65.87 is the top, 64.56 is the neckline. Similar sort of, we're in these wedge formations on most of them. Double top potential, but again, it's a long way before we get that tested, 13,270. But in the meantime, it looks like we've rejected this move higher and are focusing a couple of negative days. So slightly bearish on the DAX, on the German 30. A little bit similar to CAC. Indecision a couple of days ago, followed by a bearish outside candle. So that's negative. So expecting again, if we break below yesterday's low, 56.43, that should accelerate. The Dow, the Nasdaq, and the S&Ps, they're all the candles yesterday do look very indecisive. They're sort of like hanging man type, doji type candles. Dow Jones was the only one that finished positive. Nasdaq and S&P finished negative. We're close to the 4,000 level, which in the S&Ps, which is a bit of a psychological level, but showing signs that we may not get to test it this week with these negative candles. That's it for me.
Okay.
Lovely.
Cool. Over to you, Ian.
The dollar first. So sort of big picture analysis, just quickly going back to this. So 5 waves down, so 3 waves up, and that sort of puts us into this. It's an 8-hour chart, puts us into this scenario here. Now, what we need to do to complete we've had an ABC up to the upside. We now need an ABC to the downside, and what we don't want to see, and I'll make this quick, is a move below this swing low, because that would basically highlight that that wasn't the 5th wave. So what we're looking for is, when this completes, is a move around about this sort of level, around about 89.60. So we could move higher from here, we could move higher from there. So it's all a bit of a lottery at the moment. But if we go to this chart, I think this is quite important this morning. This is a 4-hour chart. So notes that I said that we didn't want to go below the swing low. So the only cipher pattern that doesn't break below the swing low is a Gartley, which is 61.8%. Sorry, there's two. A Gartley, which is 61.8%, or a BAT, which is at 50%. So you can't get to 78.6, and if you're short at 38.2, they both extend. So basically, if you want an inside pattern, it's got to be around about here. And I thought this is quite interesting, because yesterday's swing low, it is below the 50% level, but when you use your extension tools and your retracement tools, this is the lineup that we want. So 88.6 and 161.8. So I'm wondering whether or not today is going to be a recovery day for the dollar index, just to complete. Remember, we're looking for this A, B, C, D. So just to complete this BC leg, and you've got to remember the BC leg can get all the way up to 88.6% of this decline, but it is also common for it only to get to 38.2% of the decline. So it's not really a leg that you want to be trading. It's just that you want to wait until it's finished, basically, and then try and get on this leg here. So I think more choppy trading. But when we go back to FX majors, so that would highlight that we've got a top in place up here for euro dollar, but again, expect some choppy price action. This is 78.6% of this move. So again, there's potential to move down here. This will then make the dip buy here, will then make a Gartley up here. So for today, it's looking quite bearish. Cable, we highlighted this yesterday and said, well, we don't know if it's going to hold. This is actually a cipher pattern. And we're starting to move to the downside. This is a crab formation. If we go to a shorter time frame as well, which is the hourly chart, we're just breaking out of this swing low. The hourly chart on euro dollar, by the way, looks like a descending triangle formation. So again, it's holding a bit of a bearish bias on the shorter time frames as well. Dollar Swiss, basically looking at that, tracking the dollar index higher. So again, it's hit that 50% level or just below. Got a lovely confluence area here for the bat formation. So again, a move to the upside, but I'd be very wary if you want to trade this one, because, as I said, they can be short. Dollar yen, again, this move up, potentially just driven by the dollar. Now, if you get a move all the way up to the 88.6% pullback of this decline, then that is worth a short entry as far as I'm concerned. It'll be around about 105.54, because the target level, and this is lining up really nicely, 38.2% fib here, that forms a crab pattern. So basically selling into that rally with a stop up here and a target down there, which will also, if we go to the daily chart, will also complete this 5th wave, because it will bring a new low into place, and basically that would finish off that dollar yen Elliott wave count that we've been talking about. So that brings me on to dollar CAD, which is probably sort of the favoured one today, only because I'm thinking about that potential oil trade. So oil to the downside should mean CAD to the downside, which should mean dollar CAD to the upside, and potentially for that dollar strength that we talked about. So this is prime here at 126.53, because if you note down here, that would be a 78.6% pullback of this move, and then basically up to 88.6 and then down to here. So I think dip buying in here this morning offers quite decent risk reward, because we've also, it's not just a technical formation, but we've also potentially got some fundamental news that could back it up. One currency pair that's not, I don't think it's following the sort of that sort of bias, but I wouldn't want to trade it either, is Aussie dollar. So this just looks like it's flatlining. I think that's probably going to consolidate today, like a fourth wave consolidating channel. And I think that the real move is up here to try and get short up here. So I'd watch, keep an eye on the dollar index and Aussie crosses. But at the moment, I think it's just in no man's land. I wouldn't really look to the 261.8% because I don't think you're going to get anything out of it. Euro sterling, and again we noted this yesterday, and I wonder if it is going to hold now. We've got a 61.8% fib here, only because sterling looks weaker than euro this morning. And if we go to these cross currencies, these baskets, I thought this was quite interesting for the basket. So this is a wedge formation for Joe's sterling basket, and we're just breaking out to the downside. And also on the sterling basket, we've got, or we had, a perfect butterfly formation, and that's broken to the downside. So sterling's looking quite weak. So I think euro sterling could have an extended move higher, but I'd only look for this to be sort of a free wave correction, looking at the big picture. So A, B, and then BC up here. And I'd look to a 78.6% fib of that last quite a strong decline. Euro yen really struggled to get anything on this. It's just been chopping around, but then I sort of messed around a bit this morning because I have loads of time on my hands. And I thought this was quite interesting. Again, you got an 88.6% fib level here at 127.22. Now, if we draw it out, you've got a confluence area all the way down here. So that really would mean, I don't think that would be euro weakness. And again, just looking for decent sort of risk reward trades with a stop above there, that offers some humdinger reward if it plays out. But like I'm saying, it does look, if you look at other time frames like the daily chart on euro yen, you can't really decipher much going on here. It's virtually moved sideways for about the last 10 days. So it is high risk, but it's also high reward on that one. That's me done, I think.
Thank you, Ian. Comprehensive as always. Gun to the head trades from yesterday. So we pick our 3 trades in the hope that we can pick a winner between now and 9 o'clock at night. And our stinking run continues, unfortunately. 3 trades, 3 stop outs yesterday. So it didn't work out for us at all. I mean, in terms of why that is, I think really just as Ian's mentioned, there's a lot of choppiness in the market, particularly in some of the FX markets that we look at, and some of the technical setups that we often follow just aren't playing out at the moment. And that is, often the way it goes in markets. It's all subjective, and we're all looking at different things, but a lot of these patterns just aren't following through. Would you say that's right, guys?
Yeah,
are you seeing similar things?
I think we've sort of you've got to accept that you're going to get drawdowns, and that's what it is. It's a drawdown. It's not necessarily that you've turned into a bad analyst or bad trader. You're sort of following the same things, but markets sometimes develop and change, and you've got to maybe sometimes make small adjustments to try and take that into account. And then they sort of come back and become a bit more trending. and that's
Yep.
yeah. So it's there's no excuses. Just we're crap at the moment.
Yeah, that is exactly right. And as you say, I don't think there's anything particularly wrong with that. It's just the way markets are at the moment, and I'm pretty
Yeah.
sure that when they sort of even themselves out and some trends become clearer, then we'll be back on the horse and everything will be all right. But in the meantime, you just got to preserve your capital, and keep following your risk management stuff, really. So,
Yeah.
who's got an idea
Okay.
today?
I'm going to go with the same as I did yesterday, Bitcoin. And yeah, I'm sort of going for a big risk reward. Obviously, a bit more than that, son. So I'm getting long here, 44,900. I think that we're in this flag formation. I'm looking for it to break higher. I think when Musk came out last week and said they bought 1.5 billion of cryptocurrency, I think other companies are going to be doing the same and coming out with similar sort of statements. Even if Musk turns around and says he's bought another 1.5 billion, we could see another similar move to what we got last week, which is looking at maybe another 10,000 points, looking up towards the 53,900 for the target for this trade idea today. The stop is at 43,400. I mean, if I wasn't going for such high risk reward, which is 6-1, maybe 3-1 would work better, and then you'd have a lot more room on the downside. But I'm sort of being aggressive with it, just because that's how I roll. So buying it at 44,900, stop at 43,400, and target 53,900 on Bitcoin.
Nice. I think I saw a tweet yesterday saying that he made more money in a month on his Bitcoin long with the Tesla cash than he has in Tesla.
Wow,
more money than Tesla's actually made.
That is incredible, because obviously
Wow.
they're massive. If that's the case, then he's going to do it again, isn't he?
If that's the case, we should all retire and just buy some Bitcoin, shouldn't we?
Yeah.
Yeah.
If everyone does it, the whole world, and it will just keep going up, won't it? You don't want to be the last person holding it, do you?
No.
Ian, what you got?
I'm going with that. I'm going
Bloody
with that. This is CAD-yen, and I keep on going on about these 88.6% pullback levels. Well, we're extremely close to one, which is at 82.63, and if it moves all the way down here, it would make a very nice crab formation. So the risk is extremely limited, whereas the reward, as you can see, is a great big whopping 10R. So I'm getting short at 82.55. I'm targeting 82.80, and I'm looking for 80 the figure, and I hope that OPEC does me a favour.
Nice one. I'm going to take a look at dollar index today and
sell it.
No, I'm going to buy it. I know you were saying sell it, but I just can't see past this inverse head and shoulders that have been spat on about for ages. I know it broke out, but it's come all the way back. I was looking at a fib of this sort of right shoulder just to see where that was, and it sort of, as Ian mentioned, that 88.6 level, it sort of got fairly close, and this move lower after that breakout has been fairly severe. We've seen it go oversold on the 4-hour chart. Arguably, there's some bullish divergence as well on the intraday charts, and some stalling around here following that move lower. So ideally, what I'm looking for is a breakout of this downtrend channel that's formed. That would be my cue to buy it. I think that would be a stronger signal. But obviously, I've got a gun to my head right now, so I need to make a call. So I'm going to buy it. I'm going to target a move up to 91.60, and I'm going to place a stop loss just there at 90.19. So looking for 6.2R on that one. As I say, I think the better signal is a break above that channel there on a closing basis. And then I'd really fancy it, but going to go with that now. That's my trade of the day.
Nice luck.
Okay, so we've already had a little bit of a look at the calendar, and we saw there wasn't very much. We've got initial jobless claims at 1:30, and as Ian mentioned, that OPEC meeting has been slid into the calendar, but not appearing on all calendars. It would seem.
No, I've never seen it before. So
On the earnings front, we've got earnings from Nvidia, Walt Disney, Kraft Heinz, and PepsiCo. So that may provide a little bit of interest on the corporate front. Other than that, I think that's pretty much it.
Yeah.
Nice one.
Cool. All right, guys.
Have a good
Good luck.
day, everyone.
Yeah,
Enjoy.
you too. Speak to you
Cheers.
tomorrow.
Bye.
Bye.